Hi there, welcome to Kneppy Invest. I haven't done a standalone video on Zip for a few years. I thought maybe now is the time to start doing Zip videos again because the sentiment in this company is definitely changing from highly negative to positive. And it doesn't hurt when the company releases a results announcement and the share price rallies 16.5% on the back of the announcement. So the market liked what this company produced in the last quarter and the first half of financial year 24. So I thought, why not do a video on this company again? Because it seems like things are turning around for Zip. Now, I like numbers, and Zip provides us with lots of numbers in this sort of announcement. They release these announcements every 3 months. So, second quarter financial year 24 results update and interim first half 24 results update. They actually also released a correction announcement because one of these numbers was wrong. Not these numbers, this is the correct table, but one of these numbers in their original announcement was not correct. I think it was transaction volume. They had it down 3%. But the correct number was transaction volume up 9.4%. So just looking at the financial performance, operational performance, and net bad debts, I can see why the share price has rallied 16.5% on the 22nd of January. Everything's moving in the right direction for this company, particularly when it comes to America. Now, things are not progressing as good in Australia and New Zealand because I do think Zip is more mature in this particular market. But definitely in America, things are progressing really nicely. Revenue, and they've also separated the second quarter results of financial year 24 into quarter-on-quarter growth and also versus the previous corresponding period, which is the second quarter of financial year 23. And everything's moving up. Well, except one or two things when it comes to active customers. There are a couple of down arrows there. But revenue, I'm going to compare, also, the other thing I'm going to compare to the previous corresponding, not the previous quarter, because I do like to compare apples to apples. And that's why previous corresponding period comparison is apt. When you do compare quarter to quarter, you might not be comparing a similar quarter, particularly with a company that is focused on retail. Anyway, revenue or overall revenue up 27.9%, America up 35.5%, ANZ up 20.4%, transaction volume up 9.4%, America's up 32.3%, transactions 4.1% up, America's up 29.2%, but ANZ down 9.5%. So not doing as many transactions overall in Australia and New Zealand. Is that because of interest rates? Don't know. Active customers down 2.5%, and America's down 2.2%, and ANZ 3.2%. So probably, if I had to pick one red flag, that would be it. That active customers have dropped over the past year by 2.5%. But if you do look at quarter on quarter, that is actually up 1.1%, driven by America, up 3%. Australia and New Zealand down 1.9%. Merchants up 9.3% in the past year, 1.7% in the past quarter. And net bad debts, and this is very important. You don't want to see net bad debts rising. And in fact, net bad debt is falling, down from 1.84% in the fourth quarter 2023 to 1.74% in the second quarter of 2024. So just based off this particular table, disregarding all the commentary and everything else they released, I can definitely see why the market was excited about this particular announcement. The other thing I want to mention is the group cash EBITDA. Now, this is really interesting because the accepted metric is EBITDA, earnings before interest, taxation, depreciation, amortization. But Zip management want to exclude interest for quite obvious reasons. They do pay a fairly heavy interest bill, something like 164 million or something like that. So they want to exclude that. It's a real cost, however. But if you do focus, and the other thing I should mention, if at any time Zip changes the metrics they are using and comparing, that would be a really negative sign, a really big red flag. So they do tend to use EBITDA, and EBITDA has been improving over the past year, in fact, significantly improving. So for the first half of financial year 24, it is expected to be between 29 million and 33 million. 1 year ago, it was negative 33.2 million. So the first quarter of financial year 24 was 9.5 million. But 1 year ago, again, negative 33.2 million. So significant improvement in EBITDA. Zip will report on its cash EBITDA performance in more detail at its upcoming first half 24 results. So that should be in February. So things are moving in the right direction for this company. However, because they did exclude interest, I wanted to see what sort of interest bill Zip has. Because to fund all the customer receivables, because when you use Zip or Afterpay or anything like that, the Zip, the company, takes on the costs of you purchasing all those products. So that is a significant bill. And to pay for that, this company needs some financing facilities. And to get those financing facilities, they need to pay interest. So a company like Zip has a significant interest bill. So let's have a look at their financial or the last financial year or half year interest bill. This is from the company's full-year results that were released in August. Note 3, expenditure, just focus on interest expense. And fairly big interest expense of $165 million. So you can see why the company would exclude interest from their EBITDA calculations. Just focus on earnings before taxation, depreciation, amortization. Now, if you do go to note 3, after the interest expense, they do talk about depreciation and amortization, and that expense is significantly lower than interest. So don't completely ignore the interest expense for this company. It's a real expense. $165 million in financial year 23. And if interest rates don't go down, and if they can't change their financing facilities when interest rates go down, then that interest bill will remain fairly lofty. The other thing to understand also is if Zip gets bigger and bigger, more than likely they'll actually have to increase their financing facilities, and that interest bill actually might go up significantly as well. No matter what you think about Zip, and no matter what you think about this particular announcement, don't ignore what's happening on the chart right now. Don't ignore that the sentiment in this company is dramatically changing and has been changing over the past few months. From highly negative, you can see that on the chart, share price in a well-defined downtrend over the past few years. And one of the reasons share price of this company has been in a downtrend is because we were in a rising interest rate environment. It looks like that is now come to an end, and the market is expecting interest rates to drop, and that will have a positive effect on Zip. And that's why the share price is now in an uptrend. I am calling it a beautiful chart developing here. Not only have we seen the share price of this company move into an uptrend, just look at the increase in volume since about October. A massive increase in volume, which tells us that the market and participants in the market, retail investors, but more importantly, fund managers, institutions are getting excited about Zip. And that's why the share price is moving up. And a nice little rally after a bit of a dip. There was a bit of a dip in January, start of January, but the share price has rallied in the last 5 trading days, and share price closed at 74 cents on the 22nd of January, up 16.5%. On really big volume as well. So that's the highest volume we've seen since July 2022. And not only that, at 74 cents, this is the highest the share price of Zip has been since the start of 2023. So we are at a 1-year high for Zip's share price. That is all I have for this look at Zip and their announcement in regards to their first half and second quarter results for financial year 24. Market liked it. Share price up 16.5%. If you have any thoughts about Zip and their announcement, their results, love to hear your thoughts. So leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.